Recording start. And I'm going to go ahead and pull up this screen share. And all right, we thank everyone for joining this evening. I guarantee we'll make it well worth your time to join this podcast this evening. We have some amazing guest speakers on today. Yehuda Ismagristo, it will be sharing a CPACE product for commercial real estate. And I'll tell you a little bit about that in a moment, and we'll introduce Yehuda and Michael in just a moment. But before we do that, this meeting is not a solicitation of any specific deal, and it's not legal or financial advice. So stay tuned for more information. And another thing about this call, stay tuned. Those live on the call will receive a gift. There will be one lucky winner for a Starbucks gift card. So to those live on the call. So please stay with us to the end, and it'll be well worth your time. I guarantee that. So a little bit about Eagle City Multifamily. We're actively looking for deals and making offers on apartment deals in the DFW area and surrounding areas. And the partners here are Nikki and Sanjeev Mall and Asif Kumar on the Eagle City Multifamily Group. And another passion of mine is health. And so for your information, some of my partners and I are doing a 7-day water only fast challenge. And we're inviting others to that challenge as well. And you can find out more about that on my personal Facebook page. I'm posting some things about that for any that may be interested. And it's a reset of mind and body. It's done a lot for me in the past. The longest I've done the water only challenge was 10 days. And so it really does good for me. So okay, so introduce our amazing guest speaker. Yehuda Ismagristo is a licensed insurance agent and adjuster, passionate about helping multifamily commercial real estate owners, investors, and developers find the right insurance coverage for their needs, as well as providing support during claims process to ensure they receive a just and fair settlement, which led him to partner with Michael and to start AY Development, a general contractor and construction management company with 13 years of experience in the industry. Yehuda is very passionate about CPACE and the value it brings to the real estate and commercial buildings. And that's what I'm excited to hear about today. In his free time, Yehuda enjoys spending quality time with his wife, reading books, playing basketball, and donating to kids with disabilities to give back to the community. What an amazing thing there, Yehuda, to give back to others and less fortunate. That appreciate.
Yeah, and those are just a few of the things that I, also passionate about. But I mean, yeah, and thank you for having us, Herb over here, me and Michael. We really, just like what you said, we're really passionate about PACE and, the program and what it brings and the value. And to be honest, even before we start talking about it, from the way that we started to doing that, we really see all the values and the great things that comes out of it, and specifically with the economy and the way things are going, right? So a little bit further into the background and how we started with that. So again, my background, I've been in insurance. I own an insurance agency, and I specialize in multifamily and apartment buildings. And, you know, I got to meet Michael, you know, in one of the networking events that we did. And, you know, one of the ways that we started, you know, partnering together was really just on finding that solution through the C-PACE. And one thing led to each other, and then we pretty much started AY development to continue that path of helping people with the PACE, right? And I can promise you, once you're going to hear that, and you're going to hear more details about it, you're going to see that, you know, this is really like life-changing. You're going to hear about the values and how it's bringing and what we're doing, and to developers, multifamily owners, you're going to see this is really changing your life, right? It's really changing a lot in the industry, and specifically with what we're going through right now in the situation of the economy, right? So, and then Michael, I want to let you also talk about a little bit and open about PACE.
Okay. Herb, I appreciate the invite. I really do. Getting the information out there regarding PACE is something we've been working on for a few years. Anytime you incorporate the word tax assessment, it scares the bejesus out of people, right? So it hasn't really been that easy to get it up and going. But the reason I got involved, the main reason I got involved in PACE is because I work as a general contractor in, let's call it, storm related industry. So hail, fire, tornadoes, hurricanes. And over the last, pardon me, about 7 years, the carriers have become much tighter and less willing to do the right thing on projects. PACE came to me as an opportunity to take care of the damages that were necessary to be taken care of and fight for the insurance proceeds down the road. That way the property, the owner, is not in any limbo. They can actually start fulfilling the reason they have that commercial property, whether it was industrial or multifamily. So that's a little bit about me. I do tend to be very long-winded. I have a pastoral background. So if I am talking too long and explaining things, somebody just say thank you. Thank you to me means stop talking. Okay. So if I just get long-winded, like right now, just say thank you and Michael will stop. What else do you want me to cover, Yehuda?
Let me start talking. So I'm sure people are a little bit getting curious about PACE. So I wanted to kind of like say in a few words and start talking about the PACE, right? So really that's the purpose of what we're doing today. And what is PACE? PACE is really the full abbreviation is C-PACE, which stands for Commercial Property Assessed Clean Energy, right? So what it is, it's pretty much the states pretty much allows you and gives you 100% of the funds in order to finance or in order to pay for any energy related system that you might need to upgrade or put in your new development, which means PACE will pay 100% of the cost for anything related energy and efficiency. Now, typically there's few things that PACE can actually pay. It's always goes to commercial property. So if we're talking about residentials, that means 5 units or up, or anything that is like retail shopping centers, or any warehouse or anything like that, right? But perfect example where we see that really, and we see most of the leverage is on the multifamily. Yeah.
Awesome. All right. That's where I live too. So I'm excited to hear more about it.
Yeah, and we're gonna share some examples and really more talking to how it can help, right?
So do you want to go over, let's go over the basics, Yehuda, with everyone. So with PACE, Herb, what PACE will do is they will lend up to 25% of the current assessed value of a property, or if you're doing major measures and renovations, the as stabilized value of the property. So when I say 25%, the beauty of PACE is that they include all soft and hard costs in the assessment. So if we have to achieve an appraisal or get a survey plot or bring a architect or an engineer in, those costs are all covered in the PACE loan. So if you're looking at it from an investment strategy or a retrofit potential, factor in about 20% would be your average of the PACE loan that you would be able to utilize for cost measures, if that makes sense.
Yes.
So on a $10 million property, you would have 2.5 million in PACE funds. However, there are fees associated with it. We've all done loans before, correct? So there are fees associated with it. Here is the beauty of the PACE loan in a nutshell. You as the owner do not qualify. Your property qualifies. You as the owner, the only thing that would disqualify your property is going to be you're behind in taxes, property taxes or personal taxes, or if you've been in bankruptcy in the last 5 to 7 years. Those are the two major caveats that will detract a PACE project away from a current owner. The other caveat or the other issue that we're looking at, I apologize, my mind just went blank. So did taxes. Oh, lender consent. If there's a current mortgage on the property, we have to achieve what is called lender consent from that mortgage company. That has not proven difficult across the nation. However, there are 3 agencies that currently will not participate, and that is Fannie Mae and HUD. Freddie Mac and SBA 7 are in the process of approval. They have not approved the PACE project yet. HUD is also in the process of approval. Fannie Mae is going to be a no-go probably from here on out. But those are your 3 objectives.
And
does your owner qualify? Go ahead.
And just to simplify things a little bit better, right? So what PACE allows you to do is very simple. If, let's say, for example, someone right now is buying a multifamily apartment buildings, and when you're looking to buying multifamily apartment buildings, most likely you probably want to renovate it, upgrade it, so you can increase the rent, increase the value, and later on sell it, right? So when you're going into that upgrade phase, and you're looking at a few different measures, and you're looking to raise up, let's say, for example, $1 million for your renovation, right? That's pretty much cash that you're going to need to raise for this renovation. What PACE allowed you to do is pretty much, instead of investing this $1 million in cash, PACE will pay for any upgrades that you're going to do related to energy efficiency. And it's going to convert that into tax assessment. And it's going to be stretched to 20 to 25 years, right? And it's going to be attached to the property taxes. So a few things that you can leverage out of it is, one, it's, as far as the loan itself, right? It's what we can call like a cheap loan, right? It's not going to cost you much. You're not going to have your own, you're not going to personal guarantee for that. It's non-recourse, right? It's just a tax assessment. It's off the books, right? And the beautiful thing about it is that once you're going to sell it, right, you can pretty much sell the property together with that loan. So even if you take in that PACE and stretch it to the tax assessment to 20, 25 years, and you only kept the property for 5 years, essentially you're only paying for the PACE for the next 5 years, right? So just, and another great benefits and leverage of that is that now, instead of raising $1 million for your renovations, now you just don't need that. Now you just need to take in consideration the yearly tax assessment that you're going to have to pay from the PACE program that you just took, right? And then, Michael, do you want to add to that?
Yeah, is my screen shared? I have the deck page up. I don't know if you guys can see that or not.
See it yet? Cannot see it yet?
Cannot see it yet. Okay. Oh, there we go. Can you see it now?
Right.
I clicked the wrong button, fellas. I apologize. This, just so you know, I'm more like Fred Flintstone. I still use paper, pen, and I do math in my head. So this internet, IT stuff, not really me, fellas and ladies. But let's look at this real quick. We'll go through a quick bullet point, Herb, and then we can answer any specific questions. But the bottom line is You maximize your commercial real estate investments through PACE. Both your NOI and your ROI are affected without negatively affecting your business lines of credit. So from a contractor's position or an investor's position or an actual owner's position, it opens up waves of opportunity for you.
Okay.
So leveraging your okay, let's slow down, Michael. Leveraging your commercial real estates through investments. Yehuda just touched on that. Rapidly grow your real estate empire. Those two go hand in hand. Let's talk about that for a second. I'm just going to ask you, Herb, in your current business model, let's say you have an apartment complex you're looking at. I don't know your average weighted cost, but let's say this is a $10 million purchase. Mm-hmm. If you could bring in PACE to cover 20% of your funds towards the purchase or your CapEx, how would that affect you and your syndicate or your general partnership in the acquisition, right?
It seems like that would greatly help us.
Yeah, with the economy.
Yep, but that's what I'm here for.
So with the economy the way it is right now, we're finding that most lenders are capping everybody between the 55 and 60% LTV range, which, 3 years ago we were achieving 70 and 75% and even 80% on commercial properties. Now we're not able to do that. That may change. Honestly, if we look at the news and the economy, we can all extrapolate that that's not going to change anytime soon. So on this third tab here, where it says save CapEx and reduce deferred maintenance, again, one of the biggest costs for multifamily or any type of commercial property is your deferred maintenance, whether that's in Texas, HVACs, right? Mm-hmm. So when I'm talking to real estate owners, commercial multifamily owners, I'm asking them, what is your deferred maintenance? What was your maintenance bill on HVAC for the trailing 12? What did it cost you? What is your projected cost for deferred maintenance or updates and retrofits on 1, 2, 10, or all of the units? Let's actually diagnose what your problem is. The way PACE helps you guys out the most is let's identify where your pain is. We triage a portfolio and we triage the investor group to see where we can best apply PACE and will it actually benefit. It's not for every project. It's not for every owner, but it is an outstanding opportunity. The powerful solution here is, and I'm just too fast with my mouse. It's 100% financing. Your payback period is anywhere from 15 to 30 years. That payback period is determined by the useful life of the equipment. So just like we depreciate with taxes, it is the same way. HVACs are going to give you a longer payback period. A roof, your envelope protection, your windows, all going to give you that longer period. Covers all the hard and soft costs, which we talked about earlier. This is what I really like, the flexible and secure. There's no personal guarantee, and everybody's kind of balks at that, Herb. I mean, they just, really? How does that work? It is secured by the property. That's the key. It transfers on sale. The costs are passed through or can be passed through to the tenants. And if you have properties now, depending on how those leases are written, you may or may not be able to do so in the immediate, but over the next year to 2 year, you are able to alter those rents and increase them for your pass-through. It also preserves, obviously, your borrowing capacity, because if you're borrowing $1 million less than what you were, your DTI is not affected. You have that ability to go apply those funds to another investment now. And it's only qualified based on your property values. It funds all energy products, gas and water, anything conservation, and it's all standard for any commercial property. We're specifically talking about multifamily right now. So this is just another, and I will send you this deck page so you'll have it for your references. This was a down and dirty quick run on it. This is the key I wanted to show you. The benefits of PACE, and we've talked about those already. It's preserve your internal funds. It lowers the cost of capital. And here's the really key part. It will lower the cost. It will give you a better weighted capital cost on a purchase or acquisition. It'll increase the property value. And again, at transfer of sale or exit strategy, you're able to pass that on to the new buyer. and you're in a much better clean energy and sustainability goals for the city, the jurisdiction, yourself, if you're into that. Not everybody is. Most of us in investing are all about the money, but not all money is good money, right? So let's apply it properly. You are able to share the cost and benefits with the tenants. And the greatest thing for most investors right now is this last bullet item where it says off balance sheet treatment. It truly is an off the books assessment. The measures that are qualified for this product are, again, anything that will help reduce utility cost measures in full. Any questions over that?
I have some questions.
Please.
I'll see if anyone have questions about this C-Pace product that Michael and Yehuda are explaining to us. Feel free to type your questions in the chat or raise your hand or simply unmute yourself and ask your question as we have a chance. And but yeah, Michael, I'm interested in how it works or what all it works for. I know there's a few things that you made clear. It can cover up to 20% of maybe you could explain that a little more.
Yes, sir. Okay, so your PACE loan is up to 25%. Fees and things will take care of about 5 to 6%. So let's go with the 20% number. Let's talk about the Bedford Euless project real quick in general terms,
Yeah,
so
course.
that we're not giving up anybody's
yeah,
details.
Yeah, and I can share about that just as an example. So right now, one of the projects that we're working on over here in Texas, right? It's a new purchase of 195 units, apartment buildings. And, again, just like any other apartment buildings, it's something that definitely needs some care and love, and some upgrades to it, right? So, a few of the things that we're looking at the upgrades is replacing about, I believe it was like 30% of the AC units, right? When we're thinking about that, that's about 60 AC units. Just that alone, I would say, is on a rough estimate. What do you say, Michael? Like about 600,000?
These are probably 1.5 to 3 ton units because it's an apartment complex. So I would say your average cost is going to be between 7 and 10 installed. So yeah. let's go with 600,000.
Yeah, roughly about 600,000 just on that, right? So you have that. Now, once you replace the AC units, part of the things that PACE also, of course, allows you to do, gives you the opportunity to do, you want to replace also the windows and the doors. That also can take you to like another, like roughly like 200,000, because there is also, again, 195 units. So, just those two measures, we're already like at about 800,000. And, part of the discussions that we have is also to put some solars into the pool and the gym area, right? So PACE will also cover that. So PACE covers anything that you do to the property to improve energy efficiency and, lower your utility bills, right?
So let me step in. Apologies. Let me step in. I want to give a bigger picture on Bedford real quick to you guys. Yeah. This property currently is all bills paid.
Okay.
The current owner or somebody in the last 3 years upgraded the apartment complex power meters to the smart meters. So they can switch over to individual pay or maintain all bills paid. The strategy from this group that's purchasing this property is to revitalize the area, upgrade it from it's really a C minus, if it may be a D, but it's a C minus, I believe, on books right now, to a potential C plus or a B plus. With that, their strategy was to buy this $20 million portfolio, and then knowing they're going to have to do this X, Y, and Z to get it up to snuff, right? So the beauty of what PACE is doing for this particular group is they had already generated their CapEx funds through their investors. They already had it stabilized, ready to rock and roll. What we're able to do is bring them $4 million liquid cash for their CapEx funds that they do not have to pull out of their CapEx fund, or since they haven't fulfilled the purchase yet, it's going to go through sometime in the end of September. They could actually restructure their general partnership, maybe lose a couple of partners and pick up a couple extra shares for the general partnership. That's what I would do. I've done plenty of JVs, so I like keeping a bigger control myself. So on this particular property, as you'd have stated, they're doing HVACs. It's a flat roof. They're looking at solar to cover cost for all the common areas, right? So all your security lighting, your pool, your office, your laundromat, all of that could be powered through solar that PACE would pay for. So on that particular property that you just describing, well, they love us right now because we just shaved, that's with an H, pardon the hick accent. We shaved $4 million off their capital raise. They no longer have to go get.
Yeah.
That's huge.
Yeah. That's a large percent of the capital raise, right?
Yes, sir. So they're looking at a 55% LTV, with PACE coming in with 20% of that equity position for upgrades, renovations, and repairs. They're at 75% right now. That means their upfront capital has been dropped down to 10 to 15% of that 20 million. Their raised portion has dropped immensely.
Okay. Yeah, I mean, I do have some questions. So just to recap a little of what we covered so far of what this loan qualifies for, if it is a loan, I'm calling it that for now.
It is.
Okay, so windows, doors, HVAC units, solar, LED lighting, and things that make the property more efficient. Is that what I'm hearing?
Yes, sir. Low flow plumbing, toilets. Again, it does us no good to make the interior of your apartment complex energy efficient if the building envelope isn't protected. So that's where the windows, the weather stripping, we'll actually look at the walls. What type of structure do you have? Do we need to put a sealant on that? Is the roof qualified? Is there enough insulation? So anything that will help reduce water, gas, or electrical will be a qualifying measure. My job is to find out what are the ancillary items, if you will, or the peripheral items that go in with that. How much of that can we add into the PACE project? For another example, let's flip over to Northwest Highway. I apologize. I don't have permission to share exact details, so I'm not comfortable giving out addresses. That particular property, Yehuda's more familiar with, but that owner, it was his very first purchase as a GP. He's been in other partnerships, but that was his first one. With that particular property, he got a little bit upside down due to due diligence. Yehuda, can you go ahead and go over that?
Yeah, of course. So that's actually one of the reasons that we really partnered together to facilitate the C-PACE, and and I'll talk also about a little bit on facilitating the C-PACE and what we really do with that process, right? Because it's not an easy process. It's what we say right now that PACE will give you that money. Yeah, that's great. They are, but it's a process. It's not just like here is a check, right? It's a process. But again, on this property specifically, this is really how we started, right? Because of my background in insurance, and I had one of my clients reach to me and said, like, look, my insurance is extremely expensive just because I have a very old electrical panel. And I've been in this apartment buildings. It's 71 units apartment buildings actually in Dallas itself. And replacing an electrical panel right now is just too much for me. So I have no choice. I'll pay this expensive insurance just because I can't replace this electrical panel right now. And this is where we actually came in, and I partnered with Michael to do the PACE, where we actually come up with that solution where, we understand you don't have the capital right now to replace the AC unit, but that's why also you're paying right now a lot for your insurance. So, we had a mutual agreement to that. And that's where we took the PACE and really facilitate that. And that's a perfect example where, we took these apartment buildings that really had the need to replace electrical panel, but just didn't have the capital to do that. And PACE stepped in and, eventually helped to replace that electrical panel, right?
Okay.
And a little bit to break it down, right? It's not an easy process, right? So part of what we do in the process again is to we have the right people and knowledgeable people to go after the lender consent, communication with the lenders, a lot of different documents that we need. But the most important is to take it to the finish line.
Okay, so just repeat what I'm hearing here for some of the listeners. Oh, so you're basically doing a loan to make the property more efficient, do the upgrades. And so tell us a little bit of how it gets paid back.
Oh, that's
Okay.
yeah.
Let me run that through you real quick.
Okay.
Okay, so there's a couple of things on that, Ken. One, just because you qualify does not mean you're going to get the PACE funds. It is a multi-tiered step process to qualify. The property qualifies, owner qualifies from the tax perspective. Now the measures have to qualify. And what that means is you're going from X to Z, right? Whatever this equipment is to this equipment. There has to be a delta difference between the two. What they look for is it's called a SIR, S-I-R, a savings to investment ratio. What PACE looks for is a 1-to-1 breakdown over the length of the loan. And again, we're saying loan right now. It's about to switch over in about 30 seconds if I keep my mouth going to a tax assessment. So let's assume everything's been qualified. You looked at HVAC, we're adding insulation, we're doing LED lighting, we may do something on your roof, what have you. Everything's been qualified. We've been established our baseline. We do these measures. This is how much energy it's going to save over this length of time. Then all of that goes through a third-party review through PACE. Independent third-party review by a public engineer, or I'm sorry, professional engineer. And his job or her job is to, take your baseline, take your assessment, and verify and validate it. If you put XYZ in this property, you should receive, based on manufacturer and OEM specs, this, and this off of your usage. Once everything has been qualified, Herb, so you qualified, your property qualified, the project qualifies, the ITPR signed off on it, and the PACE administrators are saying, okay, let's go through technical and legal review. That's the technical is the third engineering review. I'm getting internet issues. I don't know if y'all can still hear me.
No, you're good.
Okay. Once it qualifies for all of that, the loan gets converted to in the jurisdiction you are. So let's say Rockwall, right? Gets converted to a tax assessment, no different than a street development or a sidewalk development in your own neighborhood. You'll get a PID or a PUD, right? So it gets converted to a tax assessment in the local jurisdiction based on how you agreed to do your loan docs with the PACE lender. That could be a monthly payback, bi-monthly payback, a semi-annual payback, or like most taxes, an annual payback. And again, it's not on your books. So it's not on your pro forma. It's not on your personal books. It's just a tax assessment.
Yeah. So, I mean, again, to kind of simplify, it's pretty much property taxes, right? You pay through your property taxes. So if you already bought an apartment building and you had a certain property taxes on it, you're going to pay that because that's your property taxes on your apartment buildings. Once you get the PACE loan, let's say, for example, you got a PACE loan for $500,000, you just take this $500,000. If it's been stretched to 20 or 25 years, you divide it 20 to 25 years, however it is, and that's been added to your property tax on your yearly property tax that you have to pay.
So when you sell or move on, that property tax stays with the property. Now, if you're in arrears, let's say it's 3 years down the road, we've done all the measures and you made the first tax payment, but you didn't do year 2 or year 3, and I'm coming in to buy the property, I'll either go ahead and take that tax debt as the new owner coming in, or that'll be your responsibility. It'll come out of the measures. That's why the current mortgage lender has to approve the PACE loan upon any type of sale or if there is any arrears. Now, let's talk about that real quickly. Because the lender consent is a huge deal and it has to happen for PACE to qualify. With that, pardon me, get my train of thought going real quick. Hold on. I have my notes. Okay, got it. That's me being funny. I used to do that in the pulpit too, just so you know. I made people laugh because without laughter, you have no life. So you converted to a PACE assessment, and for whatever reason, maybe the economy, because we can definitely understand that, rent roll drops down a little bit, your occupancy rate drops, you're not able to make that tax assessment payment year 2 or year 3. You go to sell the property, PACE becomes the first lien position upon the sale, but only for what is in arrears. So if your arrear payment is 140,000 for that 2 years, that 140 would come off the sale of the house and get taken care of. New owner steps in and now he has the tax base from that moment on. Does that make sense?
Oh, yes, just to catch up if you were behind.
Yes, sir. Just behind. So the reason the government lending institutions aren't jumping on PACE is because they have their own green energy programs and they would rather lend money on those. With every other mortgager that we've come across, when they understand it's only for what is in arrears. Now, if you're 10 years behind, that could be a big issue, right? But we haven't really seen any of that. Most people are it's a straight pass on to your tenants. That's the beauty.
And here's the thing that, you know, one of the questions that I get often from, you know, commercial property owners about the PACE is that, you know, what happened really during the sale? Like, you know, okay, like we got the PACE, it's been 5 years, now I'm ready to sell. And, you know, is it going to be hard for me to sell with this on my property taxes? Well, it's very simple answer, right? Because you as the owner, you get to choose and you get to choose whatever you want. If you want to sell the property together with the property taxes and your new buyer agreed to take that PACE loan with the property taxes, well, there you go. You just sold it. And we've been experienced already with 5 deals like this in Texas, where PACE has been transferred successfully to the new owner, right? So that's one option. Another option, you can always agree with the new seller of like, okay, I'll pay half of it and you can take the other half, right? Because the new owner is also going to enjoy those benefits and it might be, you know, appreciated also with the value of the property and maybe not, right? It depends on, you know, how much you really selling the property for. Or of course, you also, as the owner, you have the ability to just like, you know what, let me just pay it off. You know, I enjoy it. I've been paying this for 5 years. I have another 15 years to pay for it. Let me just pay it off with the sale of the property.
I have a question on the property taxes. So do the property taxes like increase with the CPACE program?
No, it's a separate line item.
Yeah.
Okay.
It's a separate line. So your property taxes for the property are going to be whatever the city decides. This will be a secondary line item that just says special assessment on it.
Okay. All right. That makes sense.
Yeah.
Okay. Well, that's a great explanation.
Yeah, and I want to touch a little bit also on some new developments, right? Because you know, we want to talk to everyone that's listening to us, and you know, on a new development also is really where you see a lot of benefits, right? When you go into a new development for multifamily, if you're looking for just for round numbers, you're looking for development roughly like about $10 million in apartment buildings. Right. So you know that this is what you need to raise, this is what you need to loan, that's what you need in order to complete this project and build these apartment buildings. If that's $10 million, that means that PACE can pay up to 25% of it towards anything related energy efficiency, meaning now instead of 10 million that you need to raise to build and develop this apartment building, you only need 77.5 million because PACE will only pay 2.5 million of your loans. And again, it's going to be off the books, non-recourse, non-guarantee, and very easy process to complete.
Hey, Yehuda, let me step in real quick on new
of course.
development. The one caveat, fellas, ladies, is that you be 5% above whatever current code is in that jurisdiction, which should not be difficult to do. Everything I do as a GC, I operate on 2023 code, IBC, IRC, ICC if I can, if it's financially invalid. But with any new development, the PACE requirement is just 5% over what current code is in that jurisdiction. So again, on a multifamily build, if you upgrade, and just FYI for anybody that's looking at buying apartment complexes, it's 2023 right now. By 2029 and 2030, the HVAC industry is going to have completely changed. The chemicals, the Puron, the A41A, all of that is going to be upgraded. The cost for HVAC components and maintenance is going to shoot through the roof. So if you're on a long-term hold, 10, 20 years, or it's a family hold on a multifamily apartment complex, now to the next 3 years would be the time to upgrade all your equipment to the current code that's going to be there with all the EPA and F, which other 3-letter acronym it is.
Yeah, that's good information. Yeah.
I have
Thank
a
you.
question. This is Asif Khan.
Yes, sir.
So,
Go
how
ahead.
many properties you have done for this kind of financing?
Okay, I'm not sure if I understood the question. It sounded like how many have we done for this type of financing? Just in our group, what did Peter tell me? We closed out last month at like $47 million in PACE loans. Now that was here in Texas, also in Oklahoma. And let's talk about that for a second. I'll come back to you, I promise. PACE is in 37 different states. Now, Yehuda and I are familiar with Texas, obviously, Oklahoma, Florida, and Colorado, because obviously those are the 4 states that there's a lot of growth in right now, and there's a lot less economic downturn. But to go back to your question, we did, I want to say it was $47 million in PACE loans last month. June was, I'm counting July, sorry. For July. June was like 18 million. And some of these projects are a couple 100,000, and some of them, the last one was a little over 9 million.
And just to elaborate a little bit about that, and a little bit on how we actually facilitate it. So we work directly with PACE underwriters and the engineers that are actually writing the reports to pretty much just take you to the finish lines. Because a lot of people actually heard about PACE before, and everybody knows PACE is great, but not a lot of people knows actually how to take it to the finish line. So we work directly with a lot of people and experience in the industry, a lot of great relationship with different banks in order to get that lender of consent, which is one of the challenges. And of course, also to complete all the reports, engineering reports, and underwriting that goes into facilitating the PACE.
Now, did I answer your question, Asif?
Yeah. So
Okay.
normally the loan is going to be initiated at the time of the closing, or you prefer that?
A great question. Great question. Okay, so best example I can give you is a simultaneous close was the last one we did in Oklahoma. So the syndicate went in to close on the property, and we closed on the PACE loan at the same time. If it's new development, or if we're talking strictly acquisition, that's all about the timing. So the performer, the schedule of values, credit history will go into play, not for the PACE portion, but for, the financing portion. Here's the beauty of it, though. You could be looking at, I know, Herb, you said you wanted to do another project before the end of the year, right? Or within the next year.
Yes.
Here's the beauty. You start looking at your projects, bring Yehuda and I in so we can look at them from an overall PACE perspective. That may alter or change. You may say, no, yes, and yes, no, because now we can look at things from hear this word, creative funding process. We don't have to be locked into the boundaries of what normal funding is when we have options to do other things, right? Here's one other thing that we bring to the table. If it is new acquisition, not new build, new acquisition, and they are in an area that is how do I say this? Dallas, for lack of a better word, is the hell capital of Texas. And actually, Texas is right behind Colorado as the hell capital of the country. So between Texas and Colorado, we get more hell per capita than anyone else, right? What would it do for you if you were looking at an apartment complex where their envelope, their roofing system is 10, 15, 20 years old? PACE can take care of that. However, because of our skill and expertise in claims management, I am a former public adjuster and adjuster. We look at it from, can we include storm restoration claim into this process? That's a beautiful process because we can go into more detail on that. Here's the one other caveat for acquisition. If the current owner, if I'm an owner and you're coming to buy my, call it 140 unit complex, and I just dropped, like you and I were talking about our Bedford project, the current owner just completed, I want to say it was about 45 HVAC replacements.
Oh, wow.
Can't do anything for that owner. He's selling it. Our guys are buying it. But here's the beauty of what I could do for that owner. I can go back 24 months with PACE on measures that qualify, on measures you have already paid for, and get you a reimbursement, whether that is with a storm restoration and insurance claim or PACE or a combination of both. But the beauty for anybody now that is a current owner, if you spent measures over the last 24 months, we can look at those from a holistic approach and say, okay, this will qualify, this will qualify, this will qualify. Here's the one caveat, and it's not a bad one, but most PACE lenders do not want to lend below $250,000. Reason being, it becomes costly with the fees and everything associated to it. So they're looking out, in their words, they're looking out for the owners. In my words, I'll choose what is too high of a fee for me. Let me see if this will work. But we have been able to do PACE loans for down to 150,000 for HVAC and electrical replacements and things of that nature. So overall, I know I'm kind of BB inside a bowling ball going everywhere, right? You've got PACE for acquisition, you've got PACE for retrofit and restoration, and you have PACE for any measures you've done over the past 24 months that qualify, where now that's a one lump sum payment right back into your CapEx fund.
And Steve, I wanted to add to that also a little bit really quick. So, I mean, the easiest process and the easiest way to explain how PACE is actually going to work is, and part of also what we do, is when you go in and buying a new apartment buildings, part of the things that we can also help you, we can actually do the full stack, and we can do the loan for the entire apartment buildings. And together with that loan, we can actually do and facilitate the CPACE that will work together line by line.
Yehuda, I apologize. Cap on that is 40 million for the full stack. That's kind of where our measure gets to. Anything over 40 million, we may not be involved in that, but we can bring up.
But we have the connections and the relationship, and we can also, help with that. We're working also sometimes with people that's even getting some apartment buildings specifically for the rehab purposes with hard money loans, right? We don't do hard money loans, but as on the acquisitions, right, we work together with the hard money lenders to facilitate also the PACE and place also the PACE loan together. So that's on a new acquisitions. Once you already have a loan in place, that's where, we take you also to the finish line. We're going to communicate with your current lender to get that lender consent and that approval to place that PACE and the tax assessment on the property. Hope that kind of simplifies a little bit things better.
All right, thank you. Thank you very much for explanation.
Mm-hmm.
Very good explanation. Yeah, thank you. So any other questions from anyone? If not, we're going to go ahead and bring up our wheel of names and see who is the lucky gift card today.
That's kind of cool. I've never seen that done. I like that.
It's spinning. It's Google Wheel of Names. You can Google it and add as many names as you want. It spins and
You don't want.
you're the winner.
You know, I was just about to say, but Herb, it's just me and Michael over there. I mean, I don't even see your name
Yeah.
over there.
Or are you Asaph or anybody else? That's all right.
Yeah.
Enjoy. We all enjoy coffee. I'm from Texas. I drink it 4 pots a day. So
Yeah, so within the hour, you'll receive an email with
that is
Starbucks
cool.
card. And you just open your email and scan it, and it pays for it right there. So
All right.
have fun with
Appreciate
that.
that.
We really
Thank you.
appreciated your knowledge that you shared, Yehuda and Michael, on this C-Pace product. There are lots of people out there and operators that will benefit from that over the next few years, especially with AC units being upgraded, like Michael mentioned. They're getting old, you need to be upgraded, and there's some good funding here for that. And so with that, we'll wrap it up and see you all next week.
Outstanding. Appreciate your time, Herb. Thank you
Yeah.
for inviting us.
Thank you
so
very much,
much, Herb.
Herb. Thank you.
One
Thanks.
more thing, if anyone out there that sees these recordings, reach out if you want to get in contact with this product with Yehuda and Michael. Just reach out to me. I'll get you in contact with them. So
Appreciate that, Herb.
there you go.
Thank you, Herb.
Have a great day.
Thanks, guys. Bye-bye.
Thank you.